Hi there, and welcome to Enlightened Super Trader Education. This is Reynaldo speaking. Now, for those who is currently watching this, a few days ago I did send out an email as part of an exercise to see basically on where your trading skills are. I know it's a bit more of a challenge sometimes when there's no indicators involved, and it's also really good to get back to basics and just looking at price, who's in control, looking at the trend based on supply and demand, whether the bulls are in control or the bears are in control. Um, and also, for those who participated, I would like to thank you for participating. And part of that, I received part of the survey. 37.5% stated that they will go long, 35.7% stated they will go short, and 25% stated that they will do nothing and wait for a confirmation. Some of the answers actually very interesting. Um, One guy basically stated that if it breaks through a certain price point, they will short it, but if not, I'll wait for a confirmation to go long, which is fantastic. Um, Another trader basically stated, looking at the trend alone, I'm going to go long. And some basically said, well, it all depends from what we currently see. The bears are in control, so I'm gonna go short. So these are the answers that basically got. Also, I got also an answer saying that from what I do know now from Enlightened Super Trade Education, from you guys, then I'm gonna go long. Excellent. Okay, I'm gonna explain as well based on my own personal analysis, since most of you wanted to know what I think of it and the way on how I trade. And for those who didn't participate, I know sometimes either you see my email, you just delete, or maybe perhaps you think that it's not valuable enough. That's fine. That's okay. But this type of exercises, participate because this is how you will actually develop and improve your trading skill and also to know where you're at based on trading. If you're a type of trader who uses a lot of indicators, sometimes it is great to come back down to basics and the least thing you be doing is you being dependent too much on indicators. Remember, an indicator is just an indicator giving you just an extra boost on your analysis on what you think, right? It gives you that extra confidence. And the reason why we use indicators is because of the unforeseen future events that creates the uncertainty, that creates the fear, that creates the self-doubt and the hesitation on why we were not going to go in or not. All right, so this is my explanation. Okay, firstly, we need to look at the actual trend. What is the trend? Based on the current price. So when we're analyzing, or when I'm analyzing, I need to look at what's the current bar doing. At this point in time, bears are in control, and it created a new low. And what is that low? Then I need to be objective. That low is on that price at 123.44, which also when the price didn't got supported, there's also in the past based on that opening and the closing a few days, 7 and 8 days ago, that the price did break at a good level of supply, which now created demand. And where it as well in the past? Well, yes, when I sent out the exercise, there wasn't really enough evidence in the past on where the price is, and I'm just gonna go through and have a look. So it is very clearly enough that in April of 2011 created a supply, didn't want to go and supersede through that, and hence it did break. And then there's also in 2010 being a level of demand at one point and then breaking out to the downside, which then continued all the way to the downside right there. So that 123.44 is a very significant number. All right, let's go through as well looking at the trend. Okay, yes, being objective. What is the definition of an uptrend? An uptrend is a series of higher highs and higher lows, and we're connected the trends, we're connecting the higher lows. So we created now here, we have a primary uptrend that is no longer valid. We have a secondary uptrend, and we have a tertiary uptrend from here. And if I'm going to expand this, notice how the price alone, or the low of this bar, just touched on the broken uptrend line. Perfect. Okay, that to me, then that is a really good strong point between a good demand from that low and that uptrend. Then what is the probability that it will go up? It's highly probable in order for the trend to continue. However, there's also this empty space right here. Based on that the price can also go to around 122.50, with the biggest major uptrend, which is the primary, is down here on that 120. Alright, so it's a really good strong uptrend. So the odds and probability that it may continue to go further is highly probable, since it's also 3 days in a row that it dropped. The market doesn't go in a straight line, they're going to keep on tanking, and then now it will create a low, and then perhaps it will push it up. Then the odds and probability that the price will continue to go to the upside is highly probable. Alright, let's go through, and here we go. So here the bulls are currently in control. So now here's the next exercise for you. Are you bullish, bearish, or neutral? So in other words, if you're bullish, are you going to go long? If you're bearish, are you going to go short? Or if you are undecided, uncertain, are you neutral? You're not going to do anything. So in other words, you're going to hold or do nothing. Alrighty, I look forward to your answers. Please, if you like this type of exercises, give me feedback as well and comment below on my blog. And in terms of your answers, email me at reynaldo@esttrader.com, and I look forward to your answers. Alright, take care until next time. Happy trading.